Thank you and welcome back. We are discussing the currency. The Kenyan shilling has been on a fall for the last 6 or so weeks, and we are trying to make sense as to why this is happening. Part of our conversation has told us that oil prices have something to do with it. During the COVID pandemic, we've not had some very good exports. That has also contributed. The imports were high because we are bringing in more things than usual, things like face masks and personal protective equipment. But now I have a question, Abraham. Is the CBK propping up the shilling?
That accusation, you're not the first to make it. IMF have made it.
First, I have not made it. I have just wondered.
You've wondered, okay. IMF have also wondered. They've wondered and they've been wondering for a long time. But I don't think there's anything wrong with doing that, even if they're doing it, because I don't know. But the question is normally how sustainable it is.
Yeah.
Because you have to keep entering the market and throwing in dollars to just try and stabilize the rate.
Yeah.
But part of monetary policy is to decide what is the maximum our rate should reach. Because we cannot leave it to markets. Nobody does. As much as we say we are a free market world, nobody does. Not America, not the UK, not the European Union. Everybody, you have to decide your outcome and then work backwards.
Yeah.
So for us, we have to decide, being an importing country, what is comfortable for an importer? What shouldn't we go above? So I think that number has been worked out, and CBK is aware of that number, and I think that's trying to work. My only worry comes in, do we have enough dollars to keep doing this before our normal dollar kicks in? But I think the answer lies also in remittances. I think this is one area where, the other day I saw somebody saying, we probably need a ministry of remittances. I think we do. Because the amount of money now surpasses any export. It is now our leading foreign exchange earner, even higher than tea.
In principle, we are exporting more people than tea.
Yes, than tea. So if it is so important, are we giving it the importance it requires? Have we made it easy? Despite our onerous regime of bringing money home, these people are bringing this kind of money. What if we eased that regime? Luckily, there's a bill, I think it's before Senate now, or it's at some point of discussion, either between the Parliament or Senate, but it seeks to address and try and make it easier. For me, I would make it as easy as possible, create breaks so that anybody with $1 in the US or in the UK or wherever they are, they feel safer to bring it home. Because that will help us a lot. Because right now, that is working despite everything. Because so that once that happens, then the rest can come building upon that success.
Yeah, you know, we did 20% up, according to the report that I've received. We were 20% up, I think, in 2019 with remittances.
Yes.
And this is what has been pushing the currency upwards. Do you foresee that perhaps on the day that the remittances go down, our currency will take a beating?
It would, but I think Kenyans being who they are, most of them went out there as target workers. They went to make their money to come back. The same model people used when they left their rural homes and came to Nairobi to build their rural homes. So the same model that has been taken a step further. So I think remittances, I think, will not go lower because there are more Kenyans living in this country and going. People are getting better jobs and people want to bring more. So if we can improve the regime, we'll definitely get more. Remember, all this money we're talking about, documentation, is money that comes through the front door. But most people don't bring it to the front door, not because it's fraudulent. It's because of this regime. So the transfer regime. So what they prefer to do is to use the informal systems of bringing money. And I have this feeling that the money that comes through the informal is probably equal to or more than what comes on the top. And probably this could be what is actually cushioning us, because dollar is dollar. But the problem is, if money comes informally, it does not pass through a system, because the systems they use are that you make a telephone call, the physical dollar does not live there, and somebody else has another physical dollar here gives. So that currency cannot do anything, because that transaction never happened.
Yeah.
But again, because it does not increase the supply of dollars here in any way. but it has distorted a lot of things. The way it be. Because that same dollar will be used to buy a property here. So it will distort a lot of things. But if we allow all this money to come through the top, then probably we would be talking of a dollar of 80 or 85.
Yeah.
So for me, I still hold the view that I'm very optimistic, and actually I look forward to that bill being assented by the president and becoming law.
Well,
And we give it a
what
shot.
does the bill contain?
Actually, unfortunately, I've not had a look at it because as I was doing my research, I was trying to see, can we give breaks? Then I saw that there's a bill going on. I'm here to interrogate that bill and see what it. But at least we've started going in that direction.
Yeah.
That this is.
Are
this
you
is
looking
critical.
forward to perhaps some tax breaks on the remittances?
It would be around two areas: the breaks on taxes, and the reducing the number of hoops you have to go through to send money home.
Yeah.
We're not saying don't do your KYC, but do it at the minimum. We're not saying don't look for do what you need to do, but try and make it as easy as possible for someone to do to send their money back home.
Yeah.
Yeah.
But the other side of this story is that a lot of guys who send money home, usually there's a lot of drama. You send your brother to build for you your house, or send your cousin to buy you a piece of land, and then you come back and what was sent to you on picture
Yes.
and what's on the ground are very different. In what ways then can we come up with good investment solutions for the guys abroad?
You see now, the reason why those things happen is because, first of all, this person is sending his money through dubious means to get here. But if it's in the open that I'm sending $100,000,
Yeah.
then nothing stops them from participating on all the entire investment spectrum that you and I are exposed to as we sit here.
Including the stock market?
Yes, and now, don't forget, Kenya also still leads with diaspora on diaspora circles. So those structures exist. The only problem has been the remittance regime. Yeah, because the guys know to send money home, I need to use this or channel. Because even now, you can send somebody by M-Pesa, but see, they know if they do that, then they get exposed to certain things, and the biggest fear is tax. So what if we made it easier? I told them, these guys don't live here. They're not consuming our public goods. Why should they pay the same tax you and I are paying? It's not even fair. So those guys should, yeah, because they're not consuming any public good of whatever nature. So even the tax they're paying, they are doing us a favor, because they're consuming public goods in the States.
Yeah.
And probably, don't forget, they're also paying taxes there.
Yeah.
So those are things we need to think about as we try to sweeten the deal, so that these guys start sending their money here. Before somebody else comes up with something better and they start sending money.
Fair enough. The Monetary Policy Committee is meeting on Monday.
Okay.
And they have been accused of being too passive, not doing anything, leaving the interest rate at the same level forever. Your thoughts?
It's true. For me, I don't know what they're going to do. But if they leave it at 7, which they have been doing for, I think, many meetings, I think we've lost count now, then what happens? The market stops responding.
They become relevant.
It becomes, and it's a critical instrument in pointing to the direction of where the interest rate should be at. But if the market dynamics have been changing through that entire period, and you keep the metric at 1, it means one of the two things. Either you're not very clever. These are clever guys, so they definitely know that. So why keeping it at 7? You see, so then the guys will be like, you know what, this rate means nothing. You see, then they ignore it. So that come the day you'll start doing it, because there are certain formulas that are supposed to be done and say this thing is, because at the end of the day, in a monetary or even fiscal policy, or any policy for that matter, you always start with the end. What do you have to achieve? So once they define that, then start coming backwards. Because even the cost of credit, if we keep that thing number there, that's why you'll see banks putting more and more applications to central bank with models that will shoot that rate up.
Yeah.
You see? But if this thing had really shown the trend that we are going down, we're going to 6, we're going to 5, trying to achieve something, fine. It's a trade-off, because the more you push it, also that will have effect on the forex. Because you start pushing it lower, the guys who are in the money market will start, the foreign investors will exit. So if they don't go to another asset class, then the cash, if they are dollars, put the pressure on the dollars and exit. So as I'm telling you, it's a big, but as I was telling you, there are the 3: inflation, forex, and interest rate.
Yeah.
So it's a delicate balance. But the good thing, we know how to do these calculations. So I think, and also because of that thing not moving, even people don't look forward to it. Because again, even if you read their communique, if you read those communiques, they keep saying since the inflation has not left between 2.5 and 7.5, then we are good. We are not good.
We're not good.
Yeah, you see, so we need to be a bit more aggressive and say that something needs to be done.
But Abraham, globally, monetary policy committees are usually very conservative. Hardly do they experiment a lot. And even by the time they make such changes, it has taken a while. It has taken some studies, some surveys. So would you really blame these guys?
No, but this has taken too long. You see, you can do all the studies you want, you can take all the time you want, but your outcomes must reflect the reality of the ground. The reality on the ground is that this rate needs to go lower. That's the pressure we should be seeing. Or if we choose that we won't take it up, let's take it up. But this thing of playing safe, I think is not helping.
Yeah.
Because we are rendering a tool impotent. You see? But then again, also, we should not expect that any issues in the fiscal space to be sorted from monetary policy. Sometimes we have that expectation. Fiscal issues must be sorted by fiscal policy. Monetary issues by monetary. And those two must speak to each other.
I have a monetary issue that I want to bring.
Yes.
There is the issue of access to credit.
Yes.
And there is the issue of lending. The private sector is complaining that they do not have significant access to credit on one hand. On the other hand, there is the issue of crowding out, that the government is coming in and taking all the money and the rest of us are not able to get the money from the banks. What can MPC do to solve this?
Now you've actually nailed it.
Nimegonga ndipo.
Yeah, you see, if you look at during President Kibaki's regime, the interest rate was pushed down to below single digit, to below 1. At one point, if I'm not wrong, it was at 0.8%. At that rate, it was completely unthinkable to put your money in government paper. So banks got stranded and had to think afresh, others they were going to go down. So what did they do? They set up tents everywhere. They made calls to...
I remember, that was my first job.
Yeah, your first job, yes. They made calls to everybody. Even somebody who had never received a call from a bank received a call from the bank, and they were told, voila, you know what? You've qualified for a loan. Why? Because they had a liability in the name of deposits, which had to have a corresponding asset. And that asset had been the government paper, which was no longer making enough money even to pay for this liability. Yeah. So the only asset class that was left was loans. So coming back to what you just asked, the government did not call banks to a room. They did not shout and tell them that you have to lend to the private sector. They lent them out of survival. What point am I making? Banks are not here to save anybody. Banks are not here to drive any social agenda or to push any public agenda. That is not their job. Their job is to meet the expectations of their shareholder, which is to maximize their profit, even if they have to lend to one person. Yeah. So if they decide they'll shift all their money to government, there is nothing you can do to them, because at the end of the day, all they have to do is to meet liquidity. Liquidity is 20%. Now these banks, the average for the banking sector is about 40-something. Yeah. That tells you that this 20 on top or more is in treasury, because treasury bills and treasury bonds count for liquidity. So in a nutshell, and answering you generally speaking, the best way to create access, because see, in access to credit, access comes first before price. Right now there's an issue of access, and it's true, because we are competing for the same money with a very risk-free client. So they'll always go to the risk-free guy. But once we cross the access, which we did at that time, then people now become sensitive to price. But at the moment, because of lack of access, that's why you see even the government had to intervene on digital, because people are willing to take money at whatever price it came at, because at least they were getting it. Yeah. But if we're able to now push through the MPC now, the same meeting we're talking about, they start giving indications that they're going that direction. Banks will not wait for you to go to one. They'll start vacating these assets and going to the to loans, because they know at least I have this asset for 2, 3, 4, 5 years, and we'll probably have more mortgages because people want to now go for the long horizon. Yeah. But if we are waiting for banks to push our agenda, they will not, because and they're not supposed to anyway.
And it doesn't matter how much you preach to them about.
You see, we are a free market economy. The money I am giving is my money. I put this bank with my money. So what I'm doing is for you to align your goals with mine. Then we go together. But you cannot tell me to go where you're going.
Yeah.
Yeah.
Fair enough. Though, there is the question of, is the lack of lending purely because of a monetary policy issue? Or on the other hand also, there's those of us who are high risk, and we are not high risk for any other reason, but we are high risk because the economy is underperforming and the bank is just afraid to give Ramogi money because Ramogi is not making money as much.
You see, we are the ones who are giving the bank that luxury. Why? Because, are you saying that we were less risky when we were being called? We were very risky even that time. But it was either that or nothing. You see, so those guys, you have to push them to a corner. And that's sometimes, that's why it's talked about, it's normally called an enabling environment.
Yeah.
Enabling can come right from soft to hard. Yeah, you can enable someone to do whatever you want based on how much you're enabling them. So for these ones, the banking sector understands only one language, that you have to align your goals with theirs. Because they came to do something, and they will not stop. You see, so it's up to you to join them, but you cannot beat them.
Yeah.
Yeah.
Is this why you are saying that the banking stocks are going to perform very well, because at the end of the day, really, they are lending to a very risk-free client?
They are, and this year being the year it is, probably that client will want more money.
Yeah.
So they will do very well. But see, long run for anybody, that's not a strategy that they should pursue.
In the bigger picture of things, yes, in the management
but
of the economy.
The bank does not. You see, me, if a bank A, my board looks at bank A, and that is all they care about.
Yeah.
So CBK looks at all the banks, but you see, not to tell them how to do business, but to make sure that they do business according to the law. Yeah, that is all.
Fair enough. I probably would come back to that, but I want to take the conversation to as we finish, the ban on scrap metals.
Yes.
The president decided that we do not need to do the scrap metals trading. What are your thoughts on this?
It was long overdue. Why do you export something you don't produce? So demand will create supply. That's why we do our roads. We put the road furniture in a month, 2 months. It's all gone.
Yeah, I remember Thika Road.
Because steel and allied metals are very expensive on the market. So this guy is able to sell steel by stealing. That's a very good model if you think about it. So by creating a ban, you've killed the demand overnight. So now the supply will have to go, because now, why would I want to cut off part of the furniture on Thika Superhighway if I'm going to sell it? So I think it was the right thing, because I think there are many other things we can sell in Kenya.
Who are the traditional buyers of these stolen goods?
No, it's not stolen goods. It's a value chain.
I know.
Yeah, so you take the small guys, sell it to the bigger guys, who sell it to the biggest guys, who smelt it into ingots, and they go. That's what they live here as ingots. So they're smelting plants. But you see,
so they don't live here as scrap.
Yes, but what the president has said, he has banned it as an interim measure to put in guidelines. So, and I want to believe those guidelines will look at, one, what really are we exporting? First of all, are we satisfying this market? Because there is a market for scrap metal, because you'll have scrap. But now we are creating even scrap that is not scrap. But now the question will be, first of all, do you want to export? Because even when you're opening, you can open it in section. You can say, scrap metal business continues, but you cannot export it.
Yeah.
So first of all, it stays here. You observe what happens, because I want to believe most of it can consume. Then, but the export market is very lucrative.
Are there other countries that have banned scrap metal trading, perhaps in the continent?
I am not aware. You see, part of the reason he was that drastic is because of the recent incident of pylons,
Not Kenya Power.
like of Kenya Power. And
Was that
yes,
a case of vandalism as well?
it could be a case of sabotage, vandalism, but now it's a matter before court. So we wait for whatever they'll come out, because actually it's a matter of investigation. But the truth of the matter is, it appears that some of it eventually finds itself in that market. The same way that oil that is in the transformers, the old transformers, it was very lucrative that people were risking their lives to go and take that oil out. So the moment you kill demand, the supply is taken care of.
Yeah.
So for him, I think it was timely. He's banned it as an interim measure, then look at it and then see if whether first of all to open and how to open. Yeah.
I want us to finish the conversation, although you have given me a dilemma. On one hand, as an economist, I want the government to lower the interest rates so that then banks can come to me and give me loans.
Yes.
But on the other hand, also as an investor, I think putting my money in banks is lucrative because, well, they are the only ones making money in this economy.
Yes. No, you see, it's always a trade-off. But you see, government exists to protect the weak from the strong, to take care of the weak so that they are not taken advantage of. So government takes a different view. As much as they are commercial, they are social. They are driven by impact more than profitability. You see, so it's more an economic issue than a financial issue. So in this case, if it serves the day that the interest rates go low and we forego financial profits for a year, so be it.
Yeah.
Because the common good at the end of the day. Because see, it's about the majority. Because see, this well, you see, you remember that in economics, there's economic growth, there's economic development. You saw that 52% of this country is below poverty line. But GDP is growing. So it means at the growth level we are growing. But at the distribution we are having a problem. So some of these distributive policies need to kick in. And it has to involve the rich giving in for the poor.
You are suggesting that our economy is significantly biased for
It is skewed because 52% is a very large number for people to be poor. So it means that we are growing the economy, but very few participants are doing it. The rest of us are watching. And when you watch, you don't get paid. Yeah.
When you watch, you don't get paid.
No, you don't get paid.
Well, I actually remember that in those years when the Kibaki administration lowered the interest rate significantly, the big banks still made money.
They did. In fact, they made more.
They made more because that's what when we saw the growth of Equity Bank, that's when we saw the expansion within KCB Bank. Of course, Safaricom still made more money than the three combined.
Actually, when you think about it, who lost? No one.
No one. It was a win-win.
We all won. So why, if that worked, why don't we do it again?
Fair enough. We have to bring this conversation to an end because, well, we've run out of time. We have a tendency to do that a lot. The conversations here are usually very interesting. Inflation refers to a general progressive increase in prices of goods and services in an economy. And when the general prices of goods go up, we call that an inflation. Are we in an inflated economy? Well, some people think we are. Other people, especially the central bank, think we are not. They think that we are only at 5.73%. The public will remain the judge. Thank you very much for joining us for this conversation. Let's meet again at 4 p.m. on Monday for Markets Today as we analyze the stock market and the securities therein. We'll have a further conversation around the banking sector, having started it today. I've been your host, Odhiambura Mogi, joined by Abraham Mudhogo, who is an analyst. And as we conclude the day, I will leave you with the currency trading figures on your screen. Goodbye. you.